In this presentation, we're going to work a tax preparation problem, problem 1.2. We're going to be entering the data entry, keeping in mind the three ways we want to think about the return. 1, entering the actual forms. 2, entering the data input into software, which will generate the forms. 3, entering this information into basically the formula, which we will be doing with an Excel worksheet. We're going to start here, entering the data into the software, and in a follow-up presentation, we will be entering into the formula using an Excel worksheet. If you have the data files for this, you should have the answer files, which will have the answers to it, the working files, which you're going to use to work the problem, and the actual problem here. So you can go directly into the working file, which will show the data input documents in a similar fashion as you might see when you're doing tax preparation. Put that information directly in and then watch the presentation and go through the answer key after that point if you so choose. We're going to be putting this information directly into the form using the software, then verifying with the Excel worksheet. Here is our test 1040. We have some basic information in there at this point in time. We also have the open items, and I would just suggest anytime working on something that you have the open items list, and anytime you have a question, you just jot it down, and then you can get to those questions all at one time. You want to push forward as far as you can go with the information you have. Ask all the questions that you can generate for yourself to be able to ask them at one point in time as you're doing the tax preparation. Okay, so we're going to go back to the 1040. We then have our information documents, which is going to be the W-2 and other information. W-2 is, of course, in our Excel worksheet type format. We have the instructions to the right of it. If you would like to see the line-by-line instructions, those can be found on the IRS website. Main items we're looking at are going to be box 1 and box 1 through box 6. The main two that are going to have an effect, of course, on the tax return when thinking about federal income taxes will be box 1 and 2, the actual wages for federal income taxes and the federal income tax withholdings. Then we're going to have below that the interest forms. So we have now added types of income, some interest income, that being reported on a 1099. On the right is an example of a 1099 form. It may look a little bit different when you get a 1099 form from the bank, just in terms of shape and size of the boxes and whatnot, but we will be using the same boxes. So here's an example of the form. You can take a look at it, instructions to the right of it if you have any questions about any of the boxes within it. And then we're going to say we have two 1099 forms. We're only going to be listing the boxes that will be used, box 1 for each of them. So two 1099 forms. So now we have a W-2 and the 1099 forms. So let's enter that information into the system. We're going to go back to our system, and we're going to say that the individual is going to be single. We have one W-2. We don't have any marriage filing information for it, so therefore we would think that they would be single. If we see any other names on documentation, we would think, well, is there a dependent? Is there a marriage going on? Or something like that, if all we had was the documentation and we didn't have the interview process first. So we're going to assume this is going to be the single return, and then we're going to enter the basic information, which of course we can get typically from the W-2 information. The W-2 will generally have, we'll have to know whether or not the filing status, single, married, head of household, so on and so forth. The information in terms of the name, the last name, and typically the social security number, as well as the address, will typically be on the W-2 form. So we can get all that information from the W-2 form. We probably can get an idea, possibly, of what they do by the W-2 form, but we want to verify that, as well as verifying the date of birth, which will typically not be on the W-2 form. This is the bare minimum information, at least the name, social security number, and filing status we typically will be able to need in order to generate any kind of reports that we can then start putting numbers in and thinking about projections on. So now we're going to go back to our forms and say, all right, we're starting off, we're going to say it's a single filing status. We've got the name up here. We've got the social security number. We've got the address that we got from the W-2 form. That all looks good. We're going to say that no one else can claim this taxpayer as a dependent. That's fine. And then we have not older than 65 or blind, and then the dependent information, no dependents for this tax return. Then we get down into the actual numbers. Actual numbers we're going to be pulling from principally the W-2. If I'm lining up the documents, typically I'll put the W-2s first, right? I'm going to put them in order. I'll put all the W-2s and then the 1099s for dividends and interest, and so on and so forth. That's going to go by what's most important to enter, as well as basically what's the easiest thing to enter. The W-2 being most important and the easiest, usually. And then you've got the 1099 forms, which are typically pretty straightforward. So then we're going to enter this information. So now I'm going to go back to our tax software and say, what do we expect to be affected on the return from this information? I expect line 1 to be affected directly, which will have an impact on the equation. The other line I expect to have an impact or will have a direct effect will be line 17, the withholdings. We're going to put how much money they earned. We're going to put how much money was taken from them by the employer from their earnings to pay federal income taxes. Now, thinking about Social Security and Medicare with regards to the federal income tax calculation, although we're going to enter those numbers into the system as well for informational purposes. All right, so let's do that. We're going to go back to the data and we'll enter this straight in, and we're going to say that we have income, wages. Within the wages tab, we're going to say that we had the box 1 through 6 here, box 70,000 and 8,500 being the main two. So we have, I'm just going to call it job 1. We should put the job name, but I'm going to put job 1, and we're going to put that it was 70,000, I believe it was, and federal income tax withheld is the only other form we should be required to populate. Lacerte guessing, the tax software guessing, Social Security is the same in terms of wages, and if that's the case, then it can calculate Social Security because it's a kind of a flat rate, easy tax to calculate, unlike the federal income tax, which is going to be this one. And then the 70,000 Medicare, it's guessing that that's going to be the same wages number, giving us the Medicare here. Those numbers look correct. If we verify them with our W-2 form, we're going to say, yeah, 4,340 and 1,015, those look good. We only need to then populate this number, which was 8,500. Now, the IRS does want the information from the employer information as well. So you're going to have to go down and get the employer identification number. You're going to have to give the address for the employer here as well. So you're going to need that information in order to give the informational purposes. Obviously, it's not necessary for the calculation on the first page of the return, but informational purposes, the IRS wants more and more information as it's able for us to do so as the tax preparation software gets better. So then we're going to go back up to the forms. Let's see if it does what we would expect. We're going to go back to page 1, and we're going to say, all right, there's the change to the 70,000. That looks good now. That's what we expected. And then if I go to page 2, we have the change to the 8,500. That's what we expected. Now we're going to go through the calculation from it. What did the software do with those changes? What's the actual calculation on it? Well, we've got the 70,000. 70,000, if we scroll down, is going to be the total income. We don't have any above the line or Schedule 1 or adjustments for income adjustments here, deductions. And therefore, we have the adjusted gross income, the AGI at the 70,000. We have the single individual. Therefore, we're going to have the 12,200 for the filing status or the standard deduction. That brings down the taxable income to 57,800. 57,800, the 70,000 minus the 12,200. Then we actually calculate the tax on it. That's done on page 2, tax and the withholdings. Page 2 then, we have the tax calculated at the 8,580. We're dependent on the software to do that. It's a progressive tax system. There might be multiple tax rates that will be applied here, and therefore we'll talk more about how that's done, but we're dependent on the system to some degree to do that for us. We could check it, but again, we're pretty much usually going to be relying on the program to actually do the tax calculation on the taxable income. Then we have the credits. Then we have the difference between the two, the tax being the same in this case. Other taxes like self-employment, none here, therefore tax is the same in this case. Then we have the federal income tax withheld, which was only 8,500, whereas the liability was 8,580. Therefore, if we have the payments, we don't have any other credits. We'll talk more about the credits, the refundable credits later. We have the 8,580. That means that we don't have a refund in this case, but an amount owed. Now, if all you have is a W-2, then this could be the case, right? But oftentimes, if all you have the W-2, if the W-4 was filled out correctly, then you would think, or if it was filled out as you would expect, with the amount of dependents and whatnot, you would expect then that you'd have a refund. But obviously, you can fill out the W-4 any way you want when you get a job and say how much do you want withheld. And so it's quite possible then, even with just a W-2, that the withholdings are under, just depending on how the withholding calculations were done, when the employment was taking place, when the W-4 was filled out. So if you have a case where money is owed, you'd want to say, hey, you should go back in and adjust your withholdings, go to the W-4, and you can fill out another W-4 form. You should be withholding a bit more. All right, so let's see what else we have there. That's what we would expect from the W-2. And then we're going to scroll down and say, now we also have the 1099, the interest income. Now, typically, a lot of banks will basically have a shortened form, which will just basically say line 1, which is what you would expect to see, which is actually the reporting of the income. Remember that a 1099 is coming from a financial institution, typically, where you have savings investments in it, and you're going to be getting some interest on it. So we have 2 of them in this case. Box 1 would be the interest income that we're going to report in our software. So I'm going to go back to line 1. What do we expect to add now? We would expect to add the interest income. So we would expect to have some interest income here. If it was over a certain dollar amount, I believe 1,500, you would think that another schedule B, would then appear. It's not going to be over that amount, and therefore we won't need that added detail. So we're going to go to the details here. We're going to go to the income. We're going to go to interest income. And I'm just going to call it Bank 1. Again, we would want the name of the institution, or we would want the name of the institution. Maybe not again. We would want the name of the institution. That's going to be 600. And then we had another 1099, which I'm going to call Bank 2. Bank 2. And that's going to be for the amount of 250. So we'll say 250. So that's 850 below the 1,500. Therefore, we shouldn't be seeing a Schedule B. So I'm going to go back to the forms. Let's see what happens. There it is. It changed that 850. So now we have the 850 there. And that's the only direct effect we're going to see. Now, and that's going to affect, of course, the rest of the calculation. So let's see what happens. Let's see what changes. Everything that had a green check that turns red is now something that has been affected by this calculation. So we had the 850. That brings the total income up to 70,850. That makes sense for the total income. We don't have any above the line, therefore the AGI also went up by that 850. That makes sense. No change to the standard deduction. That's going to remain the same because there's still a single filing status. If we then subtract the 2 out, then we're at the taxable income, 70,850 minus the 12,200, 58,650. Then if we go then to page 2, calculate the tax on it, the taxable income has changed, therefore the tax calculation has changed. Looks good. That carries down here. That same number carries down here. The amount of withholdings, however, did not change. That's still directly from the W-2, 8,500. So now we have a tax of 8,765, still only paid 8,500. Therefore, we have an amount owed of the 267. So 267 amount owed. Then how's the client going to pay that? Well, you got basically a 1040V, which isn't available at this point yet, but it's going to be just a voucher that you can pay that with. Back to the 1040. Also note, you might want like a summary of this, and many tax softwares will give you basically a summary and think about what the average tax rate and effective tax rate can be. With Lacerte, you have the tax summary here to do that. So, and it'll give a year-by-year comparison too. If you rolled this over from the prior year, and you want to compare this year to last year, which is very nice to have, then you can do that as well. And remember, anytime you enter the taxes, if you have the prior year return, it's way better to enter it into the 2018. You'd like to actually enter the tax return into 2018 than pro forma or roll it over, whatever you want to call it, to 2019, because then the prior year numbers will be there. It'll populate in this form. Any rollovers will be taken care of for you. And that's just a much easier to check to have. So it takes a little bit more time because you'd have to put the whole 2018 return into your tax software if it was a new client, and then pro forma or roll it forward. But it's often worth the time. So in any case, here we have more of our tax equation type of thing, and you got the income, the adjustments, the itemized deductions, the tax computation. And then the credits, and then the other items, the payments that were made was taken out of the W-2, and then we have the tax rate. So the added information that we have here, one, you have a quick look at it. I often go here and take a quick look at the information, especially the bottom line here. And then you also have the rates, the marginal tax rate and the effective tax rate. So remember, we're reliant on the software to basically calculate the progressive tax. We don't really explain the whole progressive tax to anyone because it would make their eyes roll over. So what we do is we say, hey, look, this is your average tax, this is your marginal tax, and we have to apply those when they're going to be applicable depending on what we're planning for. If we're doing tax planning for the future, if they expect to make more money, then we typically will have to use the marginal rate because the tax is going to go up by the marginal rate or last rate. If we just want to know how much tax do I pay, then we're going to probably talk about the average rate. Well, it's a lot of tax rates. It's a progressive tax system. You pay on average about this 15%. And that's not going to be paid on the gross income, but it's going to be paid on the taxable income after the in this case, standard deduction, which means your taxable income is that $58,650. So you can basically think that the amount that you're paying in general on average after the $12,200 deduction, $8,767 divided by the $58,650, 68, let's do that again, $58,650 is going to be, let's do it the whole thing one more time, 8,767 divided by 5,8,650, and that's going to be about 15%.